Hello traders, Nick Shaheen here looking at Starbucks. This is a revisit for me. I just recently, on the 11th, September 11th, I looked at it and it was right here. And leg one of this downside had started, and I debated whether it's time for leg two or not. And I believe I drew the possibility of leg two coming after losing this neckline. So I thought that you can go back and watch it. Early in the video, I literally draw it with crayon, and I made a little bump and then a loss of it, which will then price in this one. And we're almost there, not quite. So this is not a I told you so, because I didn't know whether it was going to go up or down. I just knew to know the levels that would matter. And here we are coming up to levels that matter again. This one had an incredible rally that was almost inexplicable. So I wouldn't be surprised to see more downside, especially if the whole market falls. If the market in general finds footing, then okay, maybe this one stabilizes, but this would not be the first one I would jump long to bet on an upside move in the market. Here something happened without an event, so I don't know if somebody upgraded it or what, right above a neckline. So immediately 85.4 sticks out to me, which coincidentally is almost this estimate that I drew right here before the debacle even started. So let's see if this is if there's another line that matters. There is, to me. This one would matter as well. Let's call it 81.90, 82 for round numbers. And then this set of candles right here, I'm not sure what happened here, but it tells me that this zone could be in contention again. So should the you-know-what hit the fan, they would want to revisit this area here to kind of like normalize the volume profile of sorts. This is a point of control. So this is a daily chart from, say, end of February on. So just looking at this zone right here, this is where all the fighting happened. This is the value area based on the volume profile. More to that, this is where there was the most action. So in theory, this should be a floor, a bulletproof floor. But it's also a kind of a magnet, but not really, until this is lost. So now they were flying in the sky above the value area. So think about the value area where everything makes sense, almost like a bell curve where everything should happen within the plus or minus normal, right? Anything beyond that is where I book longs or I book shorts if on top or below. So anything above that value area should, by definition, be unusual. It's either a reset to go higher or, hey, let's go back to normal. And normal is anywhere in between here. I'm not calling for more downside. I'm just saying that it's not crazy to get downside. And if I do get the downside, what's the trigger and what's the target? So this zone is the target of this trigger. So it also is, so it should find some support. But if they lose it, meaning if price falls back into this value area, then we look at the different levels that matter. And I just mentioned a couple. So 82, I think, was one of them. 83.90, let's call it 84 for round numbers. And also the visual on this guy right here. Let's call it 80 on round number. But this whole area here. So if I take the middle of it, 77, 78, these are just lines that stick out. What does that mean? It means I've just taken one level at a time. If I just started my longs, I would then decide where do I bail. So if this zone fails, then okay, we're talking about something new here. Then I may want to, depend on my time frame, this is probably where I would get out. If not, if I'm in it for the long haul, hey, maybe I wait a little bit to come down to here and then I'll add. That's usually how it goes. So if this could be push one, because this is a consolidation zone, this could be the first push, this could be just a breather for the bulls to push again. So it's not the end of the world. Is just something happened here, and this is the consequence of it. And I wouldn't rush to catch this falling knife. If I'm long, I'm not adding. I want to see proof that this is indeed where they're going to stop. Otherwise, there's more lower to go. So on the way up, what happens? So I can, for that, I mean, if my time frame is a lot short, if I'm trading it versus investing in it, then I look for 88.6 as a place, 88.7, because it was a ledge. They tried to hold it and then they fell below it. So let me see if I can mark it up real quick. All right. So this is just the same stock, only on the lower. This is 15-minute candles. Every candle is 15 minutes. So if visually I can see that they tried to hold the level here and they failed. And once they failed, they came back to it again to try to retake it and they failed. Worse than this one. They came back to it, they failed worse than this one. But then they consolidated, they tried again, and then they're failing. But, you know, every failure is an opportunity. Especially that now they're setting higher, almost higher lows. So the range went from here down to here. So any ping pong out, like a Super Bowl ball, remember that? Well, I don't know how old you are, but when I was a kid, that was a toy. Close a room, boom, right in the hallway, throw it. Turn off the light to make it interesting. Okay, so this would be a trigger. So 88.6 and above might invite more buyers. It starts to look like some sort of a inverse cup and handle, rounding bottom, whatever you want to call it. I'm sorry, not cup and handle, inverse cup and handle, inverse head and shoulders. Depends on the time frame you're looking at. To me, there's a neckline that got taken out and they overshoot higher, or a neckline that got taken out or overshoot lower. So this would be another ledge that sticks out to my eye, and this would be the third one. So I would expect resistance. So if I'm long, this would be where I trim or lock, depends on my time frame. And this zone right here would be the second one I would look at. So this is just shorter term. Longer term, nothing has changed in the stock. It's still what it is. They still, you know, it's a good company, well managed, etc. Is it a clear point of entry? If I'm looking to enter it and catch a good wave, I would wait. I would set, add an alert, tell me to chase it. Or if I'm long and I want to get out right here, I'll add an alert and tell me to get out. So now I have two alerts. I don't even have to watch it. Maybe I'll move this alert to here if I'm really fast trader or faster trader. There are faster traders than that. So now I have a really tight zone. And this way I can chase it up or down, and I don't have to watch this. I can go back to watching something else. So these were my thoughts on Starbucks, and here we're looking at the S&P. Again, this is not a place to load up long just because of this failure right here.